Ron from Rudder Law, and this video is going to talk about commercial real estate and industrial investing, how to define your submarket. Watch this video to find out an easy checklist. The life cycle for commercial real estate investment begins by finding your market or submarket. Find out what this means in the next 10 minutes. Starting with your market and defining these parameters is the second step in the industrial commercial real estate investment process. Now, very simply, it involves narrowing down the geographic or asset types within your ideal investment into a manageable size for you or your team to analyze and underwrite. Now, what this really means is you start with macroeconomic influences. And what I mean by this is, do you believe in your investment thesis that the warmer Sunbelt states in the United States are going to continue to see population growth? Is there going to be continued demand for goods and services in these areas? And I think those are pretty true statements, but they don't really give you much guidance on where to invest unless you're deploying billions and really billions of dollars across multiple markets. So in the absence of having nearly unlimited capital, you have to make a series of narrow bets and become an expert on individual properties. So let's start with some of those earlier theses. Sunbelt states, you could also look at population growth, you could look at lower tax jurisdictions. Anything is valid, but the devil is in the details. For example, a really good investment thesis that I like is that some people are overestimating the decline of Rust Belt states. And it's a great thesis because if you can pick up cash flowing properties from existing areas where people are fleeing, you can probably get many more years out of return. You could probably repay all of your equity even before any type of decrease in valuation of that property. And so again, all you have to do is be a little bit contrarian in your investment thesis and you'll make money on a specific deal. So let's run through this checklist. Defining your market. I think that the first step to do is to establish the market, and even broadly saying, I'm here in Texas. Let's say we define Dallas. Dallas is an incredibly large, it's a dynamic, it's a very specific market. And even Dallas, I think, is too broad. For a lot of people, unless they have a full-time acquisitions team or an analyst scrutinizing hundreds and hundreds of deals, they're not really going to become an expert on Dallas. Depending on your asset type, you're really not going to become an expert. And so for something within Texas, something within North Texas, DFW, Dallas, you really even need to pick a submarket. And so a submarket might be like East Dallas. You might have South Dallas. You may have North Dallas or something along DFW near the airport, so the airport corridor. There's a lot of different nuances, and you have to decide which one you like. And it doesn't matter which one, but you pick one and you become an expert. So let's go through the list. Lenders, brokers. Who are the active brokers? Who are signing lease deals? Who are repping buildings? Lenders, who's doing the new construction loans, who is lending on existing properties. Find out as much information as you can in order to build your own list and reach out to the specific players who know that submarket and are willing to transact in that area. Buildings. So depending on how active this area is, you can even make a list of every single refrigerated warehouse in your submarket. And you make a note, just a very simple spreadsheet or a different software program, but you make a list. Address, size of the building, age of the building, dock high office, tenanted or not. All of these factors can go into a spreadsheet where you can start to analyze, and you can quickly jump on a deal when you know every single building in that submarket. New construction, this is a big one for Texas. Just because you have a snapshot of the existing market and all of its players, there are new construction projects going up every day. And so every month, you need to update your list with the new construction projects that come online, that suck up square footage of occupancy, And that's really going to be part of this dynamic environment that we're in. But it also makes it fun. You are able to see how a submarket changes, how it absorbs the net leasing percentage. And really, again, my point in all of this is to become the expert. You need to know everything that's going on in this market in order for you to look at new deals, react quickly, and to be able to execute confidently when you are in your submarket. So these people, I say these people, any real estate investor that has this mantra and takes this approach, they know what is a good deal and they know what's a bad deal in their submarket, but they also know where not to invest. And if you're an expert and you invest in industrial refrigerated storage in Dallas, you simultaneously don't dabble and you don't look at other deals in Denver, Colorado. You don't look at comparable deals if they're in El Paso, because you're outside of your expertise, and that's where you can get hammered and lose a lot of money dabbling outside that area. So again, become that expert, build up this bank of knowledge on a very specific area. And I understand some of you watching this video, you may not have a ton of free time to say, Ron, I don't have a full-time analyst that can just sit there and compile data. That's okay. The flip side to that, the corresponding answer, is to narrow your submarket, reduce the number of properties that are within your radar, and you can, in New York City, for example, or San Francisco, you can become an expert just on a few city blocks. I mean, it's pretty incredible how dense and how much transaction volume there is. If you become an expert on just a few city blocks from here to here, that is your domain. You can do the same thing in Dallas. You can just really narrow your submarket to just, I don't say a few buildings because you might not have enough volume, but you can really narrow it down to a sub-market within that definition. And that's really another power, is that you're only limited by the amount of time that you have, but the key is to use that time and spend it well. So that's it for defining your submarket. It's really kind of a simple step, but I think it's critical to establishing the mindset. And a lot of people talk to me and they have ideas for deals and they say, I don't know where to start. And I said, well, define your asset type. And that was video number 1. Identify your market or submarket and make it as small as possible for you to become an expert. Well, that's it for now. If you like that video, smash the like button, drop a comment down below, and subscribe if you like the content. We'll see you next time.